Good morning and welcome to the BF Anderson Technical Report for April the 18th. Let's get right into the charts. As you can see, the NASDAQ continues to stay in a very strong uptrend. Volume has been somewhat mixed. We had somewhat of an above average down volume day yesterday, but the trend continues to stay strong. Remember, the trend is your friend. On a weekly basis, we're seeing, somewhat, again, lethargic earnings. Lethargic volume. We're going into earnings season. Things tend to kind of quiet down and volatility does somewhat pick up. But realize we are now, very close to making an all-time new high on the NASDAQ. A break above 8,100 would be a very positive sign. Advanced decline line continues to stay in a very strong uptrend. That is very positive. The high-low index continues to stay elevated, and we're not seeing a lot of new lows. However, we're not seeing that many new highs either. Yesterday, we did have 42 new lows, which is, above our 40 level. We are starting to see a little bit of pickup in new lows, but really nothing to be concerned about. On a long-term basis, the S&P 500 looks very constructive. The 10-month versus the 20-month continues to stay in an uptrend. We are very close to breaking out to a new high on the S&P 500. On sentiment, we're now dipping into greed. We are not in extreme greed, but we are in greed, and that should be kind of a sign that things may be getting a little frothy here. However, the small cap stocks continue to underperform. This is somewhat of a concern. We would love to see the Russell 2000 break above 1,600, and we're just kind of stuck between 1,560, 1,580. A breakout above 1,600 would be very positive. Now, this week, I wanted to mention that Larry Fink, who is the CEO of BlackRock, basically is concerned about a melt-up, not a meltdown. What he's basically saying is, now BlackRock, you got to realize they manage $6.5 trillion. They are very big players, and they have these funds, these mutual funds, these exchange-traded funds, and they see the flows of capital coming into the funds, flows of capital out of the funds. And Fink is basically saying that the flows that they're seeing are more into fixed income, and the flows out are more equity. So he's saying that he believes that there's the possibility of a melt up in stocks. Now, the last time we had a melt up, and I wanted to just take a minute and just show you what a melt up looks like. What does he mean by a melt up? Well, if you go back to 1995, you can see basically a melt up. This was a melt up in the market starting in 95, which basically accelerated in 97, 98. So during this period, stocks basically went up in a dramatic fashion around 3 to 4 years. So we're not talking about a short-term event here. We're talking about a melt-up, which could be quite dramatic. Now, this is not a prediction. This is not a forecast. It's just simply saying this is a possibility. Now, one of the other statistics out there that are important is the blast-off indicators that we got back in January. These are very rare. Now, in order to show this, I did a graph here of the S&P 500 percent of stocks above their 200-day moving average. So when you get a blast-off indicator or you get a melt-up, what happens is you get into an extreme level here of below 10%. So in other words, back in 2009, 90% of the stocks were below their 200-day moving average, and then boom, we went to 70%. Now, this is only, the data we have on this, according to StockCharts.com, only goes back to 2004. So if we take all the data that we have, there's only been 2 other occurrences, and recently that we've had a third occurrence where we get this extreme reading of 90% of the stocks below 200-day, and then we go to only 30% below the 200-day. The same thing happened back in 2011. We went to approximately 90% of the stocks below their 200-day to only 30% below their 200-day. So here recently, back at the beginning of this year, we saw the same thing occur. So the main thing that we want to look at is what happened next. Well, in the breadth thrust of 2009, which was July 1st of 2009, here's that point right here. You can see that stocks continue to stay in an uptrend for a very long period of time. Then if you go to the breadth thrust of 2011, you see the same scenario where we had an uptrend in the market for a very long period of time. So, this is an optimistic report, but that's just that's just what's happening. It's a very rare thing, and it's happening. Now, top 5 Auto Home, which is a Chinese situation having to do with the automobile industry. It's in an uptrend. You got a gap up buy signal here just recently, actually yesterday. Stock looks interesting. Here is Broadcom. Semiconductors continue to dominate the market right now. Broadcom is a player in the 5G market. There's been a lot of news here between Apple and Qualcomm, and even President Trump came out last week talking about 5G. So we're starting to see a lot of talk about 5G. You can see here with Broadcom, you got the gap up buy signal, and the stock has continued to stay above the 10-day moving average and is a very strong uptrend. This is Chipotle Mexican Grill, which is our restaurant chain. We have had a break of the 10-day. However, the violation really doesn't come in until about 684, but the stock has pulled back. There's been some downgrades by some analysts based on valuation. This is another semiconductor, Cree. This is an old name that we've been involved with over the years. They have invented LED lighting, which was somewhat a breakthrough. They also have made an acquisition in the 5G area, but you can see how steady this stock has been staying above that 10-day moving average. We actually got a very robust amount of volume here and a breakout in the stock. Stock continues to look very good. Here's another semiconductor. You can see what I'm talking about. The semiconductors are dominating the list. This is Xilinx. Big gap up buy signal after earnings. Stock continued to do well, had a little bit of a violation here, but has continued to stay very strong, actually made an all-time new high yesterday. So if you have any questions, feel free to give me a call. Thank you very much.